Hello and welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the Live Trader. I hope you're all keeping well after a hopefully an enjoyable weekend. So what we're looking to do during this session now is to trade the US Open fully live and interactive. Just very quickly, for those of you who are perhaps interested in genuinely learning how to trade these financial markets with a high degree of consistency, and looking for consistent returns when you trade these markets, and almost trying to make sure that you have a high degree of knowledge and understanding about some of the trades that you're involved with. We can certainly help you if that's the case. Do go to our website, www.thelivetrader.com, for more information, and we offer a vast range of products and services for traders depending on how much time you have available for these markets. So go to a website for more information, and all of our products and services are available at very, very low cost indeed. So I'm sure if it's something you're interested in, I'm sure we can help you with that. So let's get into it then. What you can expect, what we're looking to do during this the next hour or so is to prepare for the US trading session. So we'll go through the process that we adopt when we trade the financial markets. We'll discuss the topics that are of significance in today's trading session, and let's see if we can look for opportunities across some of the most liquid and the largest markets out there, from your foreign exchange to your commodities like oil and gold, and also your global indices markets like the S&P, the FTSE, the DAX, the Nikkei, and the reason why we do that is because we have a multi-asset class view of these markets, and that's something that those of you that shut yourselves off to multi-asset classes, maybe you can reconsider that, because you can get an overview from a market by being mindful of these market correlations. Okay, so let's start then. We'll get in, and if I could just bring up our risk warning first. Let's see if we can make some cash this afternoon. Okay, so currently up on the screen you can see our risk warning. Please just take a brief moment to familiarize yourself with our risk warning. Of course, there's a high degree of risk involved in trading these financial markets. Without the essence of risk, there is no potential for return. So it's a trade-off versus one versus the other. However, most new and inexperienced traders, they don't really pay that much attention to the risk side, and they don't perhaps understand how important it is to make sure that you avoid significant losses on your trading capital. So put yourself into the right, I suppose, adopt some of the more considered approaches, and do be mindful of that risk exposure. Okay, so a few things to consider actually as far as the news is concerned. We want to make sure that we understand some of the major news events prior to potentially entry. So what we can do is we can have a look at today's news events, and really we're looking for high impact news events. Today is Monday the 22nd of March. We're going to discuss a couple of things like bond auctions and like the impact that it's having on the yield price, which is really dominating markets at the moment. You're probably hearing an awful lot about it, and the markets can move from theme to theme pretty swiftly. So we want to sort of be mindful, we want to be knowledgeable and have a minimal degree of understanding about how these impact these financial markets, because of course to be making decisions in terms of trading those markets, you will need to be mindful of that. Okay, so as you can see, not really a huge amount to have to deal with. We've got quite a few central bankers which are speaking over the course of the day. The big one without a shadow of a doubt is Jerome Powell at 1 p.m. So he's due to participate in a virtual panel discussion about central bank innovation at an online event hosted by the Bank for International Settlements. So actually really quite an important topic, and it's going to be fascinating or very interesting to see how the markets will react to that news event. So worth worth keeping an eye on, and just be mindful around 1 o'clock. If we start seeing some volatility, then that's likely to be the reason for that volatility. So how does the central bank innovate? Well, they've kind of boxed themselves into a bit of a corner at the moment in terms of this continual printing of cash, and this quantitative easing and bond buying program that they've been embarked upon now for 12-13 years, since the credit crunch and the first financial crisis in 2008, and now with COVID, the amount of cash that's being injected into the economy is exponential. It does have some very, very significant concerns, because what do the Fed do when interest rates start to increase? And that has a knock-on effect from a debt perspective. So I suppose from a global basis, we are in excessive debt, whether it's corporate debt, whether it's government debt, whether it's personal debt, to quite concerning levels. And at the moment, what the Fed are effectively doing is, I suppose, encouraging or enabling perhaps a certain percentage of kind of zombie companies to actually access capital at very affordable rates with very accommodative monetary policy. And it's what happens when you increase rates, and these companies that really may struggle to perform may go into delinquencies, and that will have very likely to have a significant impact across these financial markets. So we'll see what happens once they turn the tap off. This is why this sort of, how will the Fed innovate? What change of approach will they or may they approach in the coming years and decades? It's going to be fascinating. As you're probably aware, the response largely off the back of the credit crunch and the first financial crisis in 2008, or should I say the more recent one, the austerity was the key word. Cutting back, making cuts, reducing expenditure, and now very much the policy is very much shifted to being accommodative spending, putting cash, as we know, in the US with the fiscal stimulus package of putting $1,400 into everyone's back pocket to be able to go out and spend their way out of this situation. So I suppose it's a marginally better approach than perhaps putting it into the hands of the wealthy. They've done remarkably well over the last 12 years. There's other sectors of societies that have not really performed that well. So the rich have got richer, and as we know, the poor have got poorer. So that inequality divide has increased exponential. So I suppose putting cash into people's pockets in a non-discriminatory way is, I suppose, it's kind of a new development really for the central bank to almost put pressure on the fiscal side, on the government, to make sure that they now step up to the plate. So I digress a little bit, but we must be mindful of the Fed chair because we're likely to see some volatility, and it's in the space of about sort of 35 minutes or so. So the last thing we want to do is be getting into dollar-related pairs just prior to that event. So let's see how the markets react to those. Just quickly through the week, we also have the Fed chair testimony on Tuesday and Wednesday. I think it's just the 2 days, if I'm not mistaken. Yeah, so it's Tuesday and Wednesday we have the Fed chair. So again, we can expect this to be quite a volatile event for the dollar and dollar-denominated assets. So we'll see how those react accordingly to those events. So that's again tomorrow afternoon. On Wednesday, we have the services and the manufacturing PMI. So we'll be able to see, how those sectors are performing in real terms. So what's been happening certainly since the initial collapse is that manufacturing has broadly been growing. Services is slowly playing catch up. Still in contraction, whereas manufacturing is in expansion. So we'd expect that theme to continue. We'll have Jerome Powell again on Wednesday. Just very quickly, we've got the Swiss National Bank, Central Bank of Switzerland. We've got the Bank of Canada and the Bank of England all on Thursday. So quite significant for those currencies. And on Friday, there is 2 days of the economic summit, the EU economic summit. We've got day one and day two, but we've also got on the Friday a Euro summit. So we'll be discussing that during the week. We'll see what comes out. Something slightly unusual, I guess, something very, very important for these markets that we would like to perhaps just address to give you a bit of a heads up so that you can be aware of these types of events, and that's US Treasury bond auctions. Why is this of any major importance? Well, you're probably hearing an awful lot in the news that and if I just get up my pen, I'll just show you. You may be very mindful that bond yields are increasing at a very, very alarming rate. And one of the reasons for that, if I just share this, is just around this period of time in here. So we're talking about February. We're looking at the auction date, you see. So we want to see what the demand for bonds are. And you can see we had a very important date around here in February. That's the date announcement, the 18th of February, and we've seen the actual auction date around the 23rd, 24th, 25th of February. Now, especially the 7-year, you will hear a little bit about that 7-year auction. I want to show you what happened at that point. So if we look at the 10-year note on the Treasury, so this is a 10-year Treasury note, and we can see what's happened to the yield in this market. So it's just rolling over a little bit as things stand. I'll just give that a few seconds. So this is what we're looking at. So from that sort of March, that February sort of 7-year auction, where they sold 7-year debt, the demand for those bonds were incredibly low. As a result, we started to see yields tick up quite considerably, and it's the rate of this increase in 1 month. As you can see, if you can sort of compare and contrast, really, that let's say on average for most of the time we've been in around this sort of 0.9% level approximately. So we had a very significant uptick on the beginning of the year. We increased sort of 20-30% perhaps up to this level, and now we've just seen a bit of an acceleration. You can see this impulsive move up to the 175 actually last week. So it's not so much that the rate is increasing, it's the speed at which the rate is increasing which is freaking the markets out. So that's why I just want to draw your attention to the 2-year note, 5-year note, and the 7-year note. And the reason why we're drawing your attention to that is because we have those similar bond auctions now over the course of this week. So we got the 2-year, the 5-year, and the 7-year. tomorrow the 23rd, Wednesday the 24th, and Thursday the 25th. So all eyes really on the bond yield, and we'll see how the markets react this time round to the demand for those 5 and 7 year treasury bills. There may or may not be volatility around those events. We just need to be mindful of the fact that the US government are selling debt, and we'll see what the demand and the impact on that very important yield curve is. Broadly speaking, if these yields tick up, then there would be significant concern that the Fed would be needing to increase interest rates. You'll see stocks rolling to the downside, and we're very likely to see perhaps that flight to safety trade begin to kick in. The same is also true if this is transitory and we start seeing a bit of a decline. It does really give the stock markets that green light to continue to the upside, because the fundamentals are still pretty good for the equity space. There's a lot of capital sitting on the sidelines. You could argue whether that capital is being put aside because of the high valuations in these markets, or whether that would be redeployed and is yet to be put into these financial markets. So that will become clear probably pretty soon. So what we've got this yield curve, which we'll be monitoring very, very carefully. The fundamental news event. This is ultimately why markets move the way that they move. They focus on certain themes and certain impacts for these markets, and we look to trade them. So we're interested in the commitment of others in these markets. We're interested to see where capital is moving to, and look to try and capitalize and benefit from that knowledge and understanding. So we try to simplify as best we can. As a result, let's get up our charts. So really we were looking for potential for dollar strength to exert itself. If you look at the indices markets towards the end of last week, there was very little happening Monday to Wednesday. Thursday and Friday we saw some significant selling creeping in. Today we're finding a little bit of support. So towards the end of last week we were looking for that dollar to continue to strengthen. Now we'll go through these. We don't have Jerome Powell for another 30 minutes, so we'll prepare our trade plan nonetheless. Just want to see this a little bit more clearly. Today's price action is a little bit on the dangerous side, for one simple reason: we're retracing Friday's moves, so we're still contained within previous days' highs and lows, and we're like that across most of these markets. The equities are slightly in a different phase. The S&P is within Friday's highs and lows. The Dow Jones opened, we accelerated to the downside, and now we look like we're reversing back to the upside. So we just got a couple of amendments to make from these trading opportunities. The dollar CAD, sorry, the dollar yen, should I say, we're looking at very carefully. There was every potential that this market was looking like it was going to roll over, and it's kind of failed to do so. So we've seen a bit of dollar strength begin to kick in against the yen. But really the dollar has begun to sell off across most of these markets. Good afternoon, Finbar. Hope you're keeping well. So do you happen to be in any trades at the moment? Anything? Do let us know. So the euro dollar, we've got some, it looks like we could be getting a little bit more bullish really very soon. We are currently below the monthly low. So generally speaking, we want to be selling below the monthly low. We want to be buying above it. This has got price action, which is just sideways moving. So that's all that this price action represents, which doesn't give us, significant clarity really from a trading perspective. Okay, so you're in the dollar CAD short. Okay, sorry, the euro CAD short. So we'll have a look at that in a second. So the euro has been strengthening today. Let's see how it's been getting on against the CAD. Yeah, and the CAD's been strengthening. So really, the euro dollar, sorry, the dollar's been the weakest market out there. So look, we'll come back to that in just a second, if that's all right there, Finbar. So we'll have a look at these two. Yeah, let's look at the Aussie and the oil. So here's the Aussie dollar trade. So again, we've kind of gapped much lower, if you can see on the open last night, and we've kind of rallied to the upside, but we're still in this period of sideways moving price action. So we'll come back to it in just a second, and we'll kind of tidy it up all up. The gold trade. Sorry, it's not gold. Gold is just contained really for now. So that's what we're seeing currently with the crude oil. The S&P we would like to have a strong look at. The Dow Jones is an interesting one. And the Nikkei is still continuing to become a little bit troublesome. Sorry, I'll turn that on. I just turned off the squawk there, but I'll turn that back on. So broadly speaking, we can see that there is probably more optimism regarding equities than negativity. So we're in a sort of a mild risk-on market condition. So the problem is, will we get follow-through? That is the big question, especially with Jerome Powell now in probably 20 minutes or so. It will be interesting to see how these markets react. So we will monitor the euro dollar and perhaps the S&P in quite some detail. Really a strong gap to the downside as far as the pound yen's concerned, but all we've done really is kind of close the gap. That's really, and even more so in the euro yen, we gapped quite significantly to the downside and then subsequently have reversed that move. So when we see price action like that, it puts a bit of a question mark over the, you know, we're not too anxious to be getting into this as a buy trade just yet. Now tomorrow, if it stays like this and tomorrow we get that extended move, then we can have a higher degree of certainty with these trades. Let me clear that off. So at the moment, we just want to be careful with some of these moves today. The euro pound is now looking like we're going to close above these levels. So that will be quite significant for this market. Previously, we saw a really strong rejection of this high in here. So really struggling to push higher. If we get a close above the 86.02, then there could be a decent opportunity. As you can see, the market had been in this little sideways range now for maybe 3 weeks, 2.5 weeks, and only now we're getting this little potential reversal signal, and that's really just, you know, euro strength over pound strength. So just regarding quickly the remaining dollar pairs, you can see that they're all pretty much trading inside Friday's highs and lows. Even the Aussie dollar, it's just running into the 50-period moving average. The CAD is now sort of trading around that monthly low, so we've run into resistance now. Will we get that follow through to the downside? That's the next potential question for the dollar CAD. We're at these levels now for the dollar Swiss. You see, the problem is it's a consolidated market. So for 2, 4, 6, 8, 9 or 10 days, we've been drifting between quite a tight range, sort of an 80 pip or so range with lots of up and down. And these generally don't give us the high probability trades that we normally look to trade. But a breakout above these levels or below these levels is the trade that we would look for. So consolidation, one of the reasons why we like consolidation and we like to see markets behaving like this is because the breakout trade can often be such a powerful trade. And that's what determines, that's the difference between a trade and a high probability trade. There's lots of traders that will be trading in and out of this range, up and down, in and out, to various degrees of success. It's a difficult thing to do. By far, the explosive trade, where you'll see a nice significant move in a relatively short period of time, is a breakout of consolidation. And another time we can go through the psychology of that trade. Basically, your buyers will have stop losses below these levels, and when prices trade through that level to the downside, all those stop losses get triggered. They become sell orders, and all of these buyers start liquidating their positions and start getting out and pushing the price further lower. So there's a psychology to it, but there's also, I suppose, a practical understanding about these market conditions. So dollar Swiss drifting sideways, and we can see this across most of the dollar pairs at the moment. So it's not being the best market to be focusing on right now. And even the euro dollar firmly trading inside Friday's highs and lows. So the dollar's not the best of opportunities. So just going back to...
Comments coming through now from UK PM at Johnson, saying he is reassured by talking to partners over the last few months. But we're stressing on the continent right now there is a third wave underway. Expect they will feel the effects of Europe's third wave soon, PM Johnson warns.
Okay, talks about a third wave across the UK. I suppose that is offset by the impressive number of vaccines which are in the pipeline. Okay, there's issues with supply and distribution, but they're in a decent position. You know, we're getting all these disease control of disease organizations, the CDC and the EMA. They're all approving multiple, or they're in the process of improving multiple vaccines, which are likely to be distributed much easier, and with higher volumes as well in the not too distant future. So that's something to be mindful of. And really, it does present difficult questions for markets. You know, like, we all know a lot of people have been putting cash in over the last 12 months into their bank accounts. They've literally not had the ability to spend large percentages of it of disposable income. So there's this pent-up demand story, which is great. You know, it will lend itself to the growth aspect, and we're probably likely to go through a little bit of a spending boom over the next year or two. However, prices will be increasing, and this is the inflation story. So this is the concern of overheating, and this is why central banks are pursuing their quantitative easing, low rates, and bond buying process. But there's downsides to these policies, which they verbally are looking to play down at the moment. What we need them to do is to be correct in their analysis and their understanding, and that remains to be seen, unfortunately. We don't have, on a global basis, we don't really have any dissenting voices. Everyone seems to be in full agreement to just print more capital and to spend our way out of this issue. We even have the former Fed chair, Janet Yellen, now Secretary of the Treasury. And of course, she will be pursuing similar policies to the policies she pursued at the Fed. So there is this conflict of interest to be mindful of in these markets. I mean, what we're primarily concerned about.
UK PM Johnson saying vaccine efforts require international cooperation and reassured the EU doesn't want a vaccine of blockades.
So there is that threat from Europe to block vaccines going to the UK. So we'll absolutely see how that plays out. Okay, so while prices are firmly trading inside Friday's highs and lows, we can exercise a little bit of patience. We don't get our high probability trades from those types of moves. Dow Jones is very much indecisive.
From AstraZeneca commenting that no concern has been raised by regulators at this point around clotting events.
So I suppose the markets to really focus on now as we sort of head towards that news event would be the Eurodollar and the S&P. So what I might do just short term, because there's nothing, we can narrow those in just a moment. So we can keep an eye on these markets. I'm just going to put in, we on daily timeframes we use the 50 period, 100 period and 200 period moving average, and I'm just going to put in, I just want to see where the 200 period moving average is in this market.
Well, comes from UK PM Johnson's spokesman saying the UK believes in the importance of countries not placing export restrictions on vaccine. It's important to work together as they expect the EU to continue to stand by its commitment to fulfil its contractual responsibility. When asked whether the UK would retaliate, Johnson's spokesman is saying that we will not get into hypotheticals, but remains confident in vaccine supplies. PM as well invited South African leader to G7 later this year, he reports, as well, saying that the UK will not be commenting on deliveries or supplies of vaccines.
Okay, so if we look at the Eurodollar, you can see obviously the larger the moving average, the further away it is going to be from price, because it takes into account an awful lot more range over 200 days rather than 100 or 50 days. So the 50-day moving average will be a lot closer to price. But just wanting to just look at this 200 period moving average, because prices are stubbornly for now above that level. So the reason why this would be quite important is that if we get a constructive break below this 200 period moving average, it could really be a significant selling opportunity to the downside for the dollar against the euro. So
just over 10 minutes time now to the top of the hour, and in central bankers news we are expecting to hear from Fed Chair Powell as well as Bundbank's Feigman speaking at a BIS panel. So the conversation panel is on central bank innovation in the digital age, hosted by the Bank for International Settlements.
So what we're seeing,
we were a note here from TZS before Powell set to speak, saying it will be delivering remarks at a BIS event focusing on central bank innovation. So they note that there will be prepared remarks and a Q&A session. They believe it's highly unlikely that the chair will break new grounds on the Fed's policy stance following last week's FOMC meeting.
Yeah, you would assume that's the case, that he wouldn't say anything that he hasn't said already. But the 50 period moving average is just taking a turn to the downside. The 100 period moving average, we could argue, is just moving sideways, and the 200 period is just continuing to move to the upside. So what we're getting is a narrowing of these Very important moving averages. Look what happened last time. We started to see this little turnaround where they all started to push higher. One of the problems with moving averages is there is a delay. So by the time you get all three markets pushing to the upside, price is considerably higher. But still, it signifies over the medium and longer term, the short and medium term, you were likely to see a little bit of an uptick in these moving averages. Now, the same could be said. We can certainly anticipate that below this level here, we'll start seeing all of these moving averages start to turn downwards. And that's what can help us make those decisions at those points. So are we seeing the beginning of a bit of a turnaround in the euro dollar? Well, we'd have to be below that 118.37 for that to be the case. So while we're above that, we're kind of trading around the monthly low. We should be probably expecting prices to continue higher. Except you can see the difficulties with this market. So that's an interesting one. So we'll see. So we wouldn't be really expecting much change out of Jerome Powell, really. But you never know with these events. He could end up saying something that the market really reacts quite violently to. So you can see. So what I'm going to do is I'm just going to mark these Friday's high and Friday's low as well. And as long as we're trading within that, so as we approach the 1 o'clock, where you get capital from the US coming into these markets, it's when their cash markets open. So let's look at these on a 15-minute time frame. You often get a much better picture. Just to avoid confusion, we don't generally use the 50 period, 100 and 200 period moving averages on the lower time frames. So we're getting this bit of rollover price action on this. So this is our daily range, the 1936 and the low of the 1873. And as you can see with this price action, really we've been up and down trying to break through both ends. So until we get prices breaking higher above that level or breaking lower, we're not really interested in this sort of choppy sideways moving price action. So that can keep us out of that intraday chop. But prices start turning and we certainly roll above the monthly high, that will give us more confidence that prices are likely to continue higher. They're currently just pulling back for now. So we'll continue to just monitor this. We'll just see how this price behaves now over the next 15-20 minutes. And again, similar kind of analysis for the S&P. We want to see so within this on the daily time frame, there's other levels of significant support and resistance. The higher and the lower levels are the daily levels, so they are more important for that reason. The reason why we like support and resistance is because they're reliable for decision making. So when you see a rejection of these levels multiple occasions, then we know that there's loads of buyers coming in at these lows trying to push prices higher. So if these markets continue and they break that level, then like I alluded to earlier, all those stop losses which are placed below these levels are likely to be placed below these levels. This is where order flow comes in. Then they all turn to sell stop orders or sell orders. So we're seeing these markets tick lower, and what we would want to be doing is getting in on the breakout to the downside around that level because of the technical setup behind these moves. So we really do like breakouts. We have to wait longer for them, but when they occur, they're much higher probability trades than many other types of trades. So looking at the euro dollar currently up on screen, this market has been just in this little bit of so these levels have been defended on numerous occasions. So if prices are above, they're looking to push prices higher. Prices break below, then we kind of keep seeing, the rejection of those highs, and because there's not much difference really, we're only talking about 6 or 7 pips. Are we seeing the same rejection of those highs? So sellers will be selling these levels. They'll identify this same level as a strong level of resistance. They'll be looking for sell. Stop loss very likely to be placed at these levels.
In a BIS panel on central bank innovation. Again, just a reminder, we are awaiting prepared remarks and a Q&A session from the Fed chairman. TDS noting that they believe it's highly unlikely the chair will break new ground on the Fed's policy stance today, following last week's monetary policy meeting.
So again, the same technical understanding exists with these stop losses placed above these levels. If prices do decide to return, then all those sellers liquidate their positions. The sell order turns to a buy order, and you'll see some liquidity pushing prices higher. And that's why people say, like with support and resistance, the more touches you get, the better, because the more that becomes a reality. And the likelier is this level here becomes a really strong level of stop loss placement. And every time it gets there, it pushes higher. So you're actually you're trading the probabilities on numerous occasions, just in a relatively short period of time. And that's why that breakout trade is often a really, really good one, and probably 60, maybe 60 odd % of our trades are kind of breakout related trades. Not all, but breakout trade is is generally your first opportunity. Just while we're discussing these. So what you'll often find is if we determine this level as a strong level of resistance,
1 minute to go now. 1 minute.
And if prices break higher, you got your first breakout trade, which is just to the upside. That's generally trade number one, or trading high probability trade number one is your breakout trade. But then what you'll often find is you get a second opportunity to get back into it on the pullback. So trade number two would be your pullback
from
trade.
The China Foreign Ministry saying to impose sanctions on 10 people and 4 entities that have seriously harmed China's sovereignty and interests over Xinjiang matter.
So you've got your breakout trade, and then what you often get is a second opportunity to get in on the pullback. So let's see if this statement from Fed Chair will provide with a little bit of volatility or not. We have most of the markets we're looking at they're quite cautious today, which wouldn't be
So no sign of comments being released here from Fed's Powell. He's looking to the press conference to begin.
Monday is often an opportunity to just kind of feel out the opportunities for the week ahead. And on occasion, we can experience mildly quieter market conditions on a Monday, but the markets are quite volatile at all sorts of random times at the moment. They used to be a little bit more predictable when they would move, i.e. during the European or the US trading session. Now we're seeing strong volatile moves.
China's foreign ministry urging the EU to correct its serious mistake and do not interfere in China's internal affairs.
Yeah, so we're still currently in the
Just be aware that's a panel discussion with Fed's Powell and ECB's 5 minute currently starting. We have posted a link onto our board and Twitter page to watch the event live.
Okay. So we are still in the pound dollar trade from last week. So this is one of these trades which is it's firmly within consolidation as well. And we've got the 50 period moving average. If prices can break below that level, then we would anticipate further downside, perhaps down to the monthly low to 135.61. So a couple of things worth keeping an eye out for. This is a trade now we'll be basically bringing our stop loss down to just above today's daily high and mitigating, pretty much all the risk from this trade. Okay, I do apologize. I'm just seeing if I can get into that press conference. Okay, so we're actually pretty close to breaking beneath this 50 period moving average, which would be quite significant. This is the price action in this market just over the last hour or so. So markets are moving from top left to bottom right, and we're trying to capitalize on that downward momentum. So a break beneath this low, which we're not too far off, would signify further, a further opportunity lower. Just got a new marginal low just below it. But the important part of this trading opportunity is the 50 period moving average and where that's kind of stacking up. And if you can imagine here, the 137.76, similar situation with the 118 or the 117 level in the euro dollar, would be a little bit of game changers. There'd be important game changers for these markets. So potentially some really good opportunities in the not too distant future. Just purely from a price action perspective, you can see this consolidation. There's your high probability sell trade. It's very, very clear to see. Will prices break and squeeze to the downside? That's what we need to be a little bit patient for, and not preempt the move. It's very important we don't preempt the move. Okay, with this one particular trade, we're preempting a little bit, just because of I suppose other factors, but so we just want to see, and if we can just take note of the 50 period moving average level, which is the 38.21. So that very much coincides with these lows just in here. We're just a few pips away from them, and then you can see once we break out this level to the downside, then we can basically remove risk on this trade. So hopefully there's some really good high probability trades not too far away now. So you can see the potential upside for the euro, the negativity for the pound. That of course plays itself out in the euro pound. In the euro pound trade like such. This is now what we want. Before we get that green light to be buying the euro pound, we do need these markets to close above this 86.02, and the reason why we're not really going to jump in now is just look recently at the number of rejections of this level. There's quite a few. So even we said exactly the same thing at this point up at these highs. We are in this sideways moving consolidation.
Merkel spokeswoman currently speaking that easing of lockdown measures currently not an option.
Even at this breakout, we were like, right, well, let's wait and see if this market can close above this level. And as you can see, over the course of that trading day, it was unable to do so. It just so happens now we do seem to have that euro sort of strength to this trade, which wasn't there previously. So maybe this is our close, and this is our continuation trade to the upside, something like that. So there's your high probability buy trade. There's a buy trade now. It's just we just don't regard it as a high probability trade for those reasons that I've just explained. So really, it's just trying to, I suppose, cherry pick some of the opportunities that give us the best bang for our buck when we engage with these markets. And for that, we need to be a little bit more patient, perhaps, than jump in and out of trades all the time. And that's why we have our trade signal service. So when we get into trades, we do notify our traders with those trading opportunities, so that hopefully it means we will save you a significant amount of time. So we let you know when we're in a trade, and you can absolutely have a look at it. And 9 times out of 10, those opportunities are still there to be traded, and that's the broad idea of it. So we'll do a little market roundup in just a moment. There's potentially a decent trade in here if the equities are pushing higher. Now they're a little bit reluctant to do so, as you can see from the daily time frame. You know, we're firmly trading inside. Okay. If anyone's in any trades at the moment you'd like us to have a look at, I'm quite happy to do so. Finbar, I think if you're still with us, let's have a quick look at the Euro CAD. So both the CAD and the Euro are strong against the dollar. Okay, so yeah, this is a little bit of a difficult one now. So we'll just do a little bit of analysis on this market. So we want to take, this is on a daily time frame now, so daily time frames are far more important than the smaller time frames. We saw an awful lot of sideways moving price action before prices broke to the downside. Take this little momentum low down here. Okay, so we've broken through the 50, 54. Oops. Which just coincides with these. So now we're looking at this and we're seeing a double top, which is probably why you're looking for that sell trade. So that's exactly it. There is, I don't know what price you got into this trade there, Finbar, if you happen to be with us. But below the 50, 59 is a decent sell opportunity. There's your double top, and this, it's taken an awful long time to get into this trade. There's an opportunity slightly above it, but from a support and resistance perspective, this is your resistance up at these highs. These are your levels of support, and we've got a really clearly defined breakout of that level. So anything below the 50, 59 would have been actually a decent opportunity, but you'd have to go back probably a couple of weeks. I don't know how long you've been in it. So now, you know, can be exposed to that pullback trade.
Comments from ECB's Weidman commenting the ECB is seriously working on digital euro.
Especially at the moment. You know, this is a strong level of resistance, so it might act as a little bit of a magnet. And there's your opportunity. So this is your breakout trade. That's your trade number one, and this is your pullback trade to get in and around this price for a second time. So direction's fine. Looking for selling opportunities. We might see a little bit of a short-term uptick in the Euro CAD. Yeah, maybe up to the 150 level, 149.80, something like that, before the next leg to the downside. So it depends what your time frame for this market is, and where you placed your stop loss and things like that. So Yeah, but broadly speaking, you know, we've had a strong Canadian dollar there for quite some time. So the overall, I suppose, analysis and direction is absolutely fine. It's just we're likely to get a little bit of a pullback off these lows, aren't we now? So just have to take that into consideration. Okay, so any further progress regarding the equities and the euro dollar? Could argue a little bit of progress. So there's your high, 1936 is the high.
A bit of an update here in the UK-EU vaccine spat. Sky News' Beth Rigby reporting that an EU source telling her the EU's exported 40 million doses and the UK exported 0 to the EU, as the EU wants UK to allow AstraZeneca to divert some supply to EU, as well as Bundelair Press PM on this. The source adding if there is no progress, Germany, France, Italy are to take a hard line. Further from ECB's Weidman that shouldn't crowd out the private sector with CBDCs.
Okay, interesting. So that rhetoric is gathering a bit of pace between Europe and the UK, asking them to sort of lend some supplies to Europe, it seems now. So, and if not, then some action may be taken. So I assume that's along the lines of restricting supplies to the UK, but we'll wait and see. Okay, so the 145 short take profit. Okay, so your profit's down there at 145. Absolutely fine. Yeah. It just depends on your stop loss, doesn't it? What was your entry price there, Finbar? And your stop loss, like, because that would be important. So hopefully we get this little rollover price action to the downside for the Euro CAD. But, they're both strong, you see. That's the problem. Foreign exchange, you're generally looking to trade strength versus weakness. So if you can pick the strongest currency and look to trade it against the weakest currency, then that generally gives you the opportunities, the high probability trades. So euro dollar, okay, the euro is quite strong today against the dollar, as you can see.
ECB's Weidman, no rush or urgency to adopt official digital currency.
Every country.
Further in the vaccine news, BBC reporting that PM Johnson did speak yesterday to Germany's Merkel and France's Macron about vaccines. So that's Laura Kunsberg reporting that number 10 will keep the temperature down after von der Leyen words at the weekend. A response from Irish PM would be a very retrograde step for the EU to block vaccine exports. Comes from Fed's Powell saying he's not in a mode of trying to make a decision yet on CBDC and repeats don't need to rush it or be the first in the market.
Okay, What's going to be quite interesting is...
Just a reminder, we're 10 minutes away from the bottom of the hour. We will see the US cash equity open for the start of the week.
What's going to be interesting on the digital currency side of things is that one of the major problems with Bitcoin and the blockchain technology behind it is it makes it very difficult for governments to be able to tax the transactions and
further from the German government's
the store of wealth.
Vaccine export curbs. The government is in favour of reviewing EU rules on this.
Okay, I'll just put that on pause just for a second. So really, the digital currency idea, it looks like a number of economies are looking to produce their own digital currency. Now, it'll be interesting to see how that plays itself out. Like I said, some of the difficulties with Bitcoin is governments lose control. And the one thing we know about governments is they don't like to lose control. So creating their own digital currency would be quite disruptive. So it remains to be seen what impact it would have on something like Bitcoin, for example. And it just depends on the widespread adoption of that currency, of that digital currency. So we have all these economies and central banks looking at these digital currencies. So they're likely to be a thing of the future, but we'll have to see how that plays out. So we're likely to hear an awful lot more about that in the not too distant future. Okay, so you got in at 49.70. Okay, so just below that 150 level, and your stop loss is at the 150. Okay, so yeah, nice entry. We've only got a 30 pip stop loss, so brilliant entry. And you were up quite a good bit, sort of 6 or 7%, I'd say, at one point down at these lows, and now it's just pulling back. So really good entry on that. Probably more downside for the Euro CAD, I would suggest. It always depends on if you're comfortable with the exposure and the risk, and if you're looking for a sizable multiple, like you're probably looking for sort of a 15%-ish return, something like that with those numbers. So that's a monster trade. That's a fantastic trade, and you're probably likely to get it, but how long will it take? And you're talking about another 300 pips to the downside, so another sort of 10% return, or should I say 10 times or 15 times your risk, whatever that may be. So apologies for talking in percentage terms, but I know that we trade at 1% for the vast majority of our trades. Unless we find no-brainers, then we increase our trade size, which come along every now and then. Okay, so look, let's wrap it up there. I'm sorry, we do have some other trading sessions after this free session through our YouTube channel, so we'll have to wrap it up there in just a moment. Just looking at the S&P, no major reaction as such. It's looking sort of mildly positive. Tomorrow now, if we get further upside in this market, then there's your high probability potential buy trade above today's high. But we would be very interested to see where the close lies for the euro dollar, potentially to the upside, and the S&P potentially to the upside as well. And just mindful of the 2, 5 and 7 year bond auction, treasury bond auctions this week, Tuesday, Wednesday and Thursday. The big one probably being on Thursday, and we'll see if there's any sort of market reaction to that. So at the beginning of this video, we went through the auction and the potential impact that has on bond yields. So do go back and have a look at that if you like. So look, we shall let's just review kind of where we're at, and I'll let you guys go for the afternoon. So unfortunately, we're just in this sort of prolonged period of consolidation across many of these markets. Even the euro dollar is firmly within consolidation in these trades. You can see the consolidation here in the dollar yen. Crude oil is an interesting trade. We would be interested to get into this above the 61.85. So keep a close eye for a buy trade in crude oil above 61.85. And then tomorrow we might get some buying trades depending on the close across the equity space. You can see the Dow Jones, it's just pretty much indecisive, but potentially looking for some buying to come in tomorrow. So I suppose the market that's probably nearest to potential entry is probably crude oil. If we're seeing the equity markets push higher, there seems to be no major reaction really to the Fed chair, and crude oil looks like it could break above that 61.85. So you can see the difference really between Friday's price action for the crude oil market versus Friday's price action for the S&P. So we like both of these markets potentially to push higher, but you can see that this one's ready to go now potentially, and this one isn't yet. So tomorrow we might get that opportunity in the S&P. So these kind of market conditions, it is better to be probably a little bit more patient than erratic. So aligning or working out the probability of an opportunity is really quite important. Buying the S&P right now, we'd regard that as a medium to low probability trade. Buying the crude oil above 61.84, if there's no other information, would actually be a higher probability buying opportunity. The only concern is we have the monthly high here above the 63.67, but maybe you can make some cash by the time price gets to that level. Okay, so look, on that note, I do apologize, I'll have to leave you there. If you can give us a thumbs up on the video, we'd much appreciate it. Also subscribe and click the bell function, and we'll notify you when we go live with either our live trade rooms or we've got a host of content that will be published through these channels in the not too distant future. As we come out of sort of COVID as well, we'll be an awful lot more active with what we do. And just for more information about any of the product and services we offer traders, just go to our website, thelivetraderoom.com, for more information, and feel free to contact us if you have any questions there. So from everyone here at the Live Trade Room, thanks for joining us. We'll be back again tomorrow at 12 noon. So we'll see you then. Bye for now.